Welcome to China Events, I am Jason. A recent story in the U.S. Wall Street Journal has raised some concerns about the internationalization of the yuan. The U.S. took the opportunity of the negotiations with Saudi Arabia and Israel to make incidental demands on Saudi Arabia to distance itself from China, which included not using the RMB as the oil settlement currency. According to U.S. media reports news from U.S. officials involved in the negotiations. Under the leadership of the United States, Saudi Arabia, Israel is opening tripartite talks, and it is said to be closer and closer to reaching an agreement. But unexpectedly the U.S. absolute Saudi Arabia put forward a few additional requirements, hope that Saudi Arabia assure in the oil trade, do not use the yuan as a settlement currency. In the final analysis, it is the increasing internationalization status of the yuan that makes the United States feel threatened. China's consistent adherence to a stable foreign policy and domestic political environment has provided strong support for the internationalization of the RMB, which is the basis for being able to attract the trust and recognition of foreign investors and the international market for the RMB. As China is the world's largest trading country in goods, the use of RMB is naturally growing under the constant promotion of RMB. Moreover, the stability of the currency is the key to the international market's acceptance of the RMB, which is best supported by China's large foreign exchange reserves and ample gold reserves. This is very different from the US dollar, which, after abandoning the gold standard, has no constraints, leading to more and more US debt. It is also because the dollar is so self-inflicted that it has led to the global de-dollarization. As one of the world's largest oil consumers, China's demand for oil resources has remained high. In the past, oil imports were settled in dollars. This not only limited our currency status, but also increased exchange rate risk and the possibility of external intervention. Secondly, RMB settlement of oil helps reduce risks and costs. Settlement in US dollars carries exchange rate risks and the possibility of external intervention, which creates a certain degree of uncertainty in China's oil import business. Settlement in RMB can avoid the risks associated with dollar fluctuations and reduce the impact of exchange rate risks on import costs. In addition, RMB settlement can also reduce the handling fee and transaction cost brought by exchange rate conversion, and improve trade efficiency and profitability. At the same time, for Saudi Arabia, the settlement of oil in RMB is also a good opportunity for both sides to win. For a long time, Saudi Arabia has been hoping to get rid of the mode of settlement in dollars and reduce its dependence on the dollar. Through the cooperation of RMB settlement of oil with China, Saudi Arabia can not only broaden the choice of currency settlement, reduce the exchange rate risk and the impact of external intervention, but also increase trade cooperation and economic ties with China, and promote the common development of both sides. In fact, the real purpose of the United States is not to ban the use of RMB, but to maintain the dollar oil system. Because the U.S. requirements for Saudi Arabia is the oil trade must use the dollar, not the use of the yuan, focusing on the must use the dollar. In the past, the United States has always ensured the use of the US dollar in oil trade through cooperation with Saudi Arabia, a major oil producer. But now, more and more countries, such as Russia, Iran, Saudi Arabia and other oil-producing countries have begun to use non-dollar currencies for oil trade. The dollar oil system is facing serious challenges. This trend could lead to a shaking of the dollar's hegemonic position and have a huge impact on U.S. economic and geopolitical interests. If every country uses its own national currency to trade oil, the demand for the dollar will decrease and the dollar will depreciate, which will be a negative impact on inflation and economic stability in the United States. Furthermore, the loss of dominance in the oil trade will weaken the U.S. influence in the global financial system. If the dollar oil system collapses, it will have a profound impact on the geopolitical interests of the United States. The U.S. is able to exert greater influence in global affairs through its control of oil trade. Once this control is lost, the U.S. will face a weakening in the geopolitical arena that could lead to a challenge to its position. As losses within the U.S. economy intensify, countries are responding by actively reducing their reliance on the dollar, and de-dollarization, avoiding dollar hegemony, will undoubtedly become a new trend. Many countries have begun to use other currencies for trade, sign bilateral or multilateral currency swap agreements, actively develop the internationalization of their own currencies, reduce dollar reserves, etc., in such a way as possible to reduce the proportion of the use of the dollar. In particular, countries in the Southern Hemisphere are more obvious, reducing their dollar reserves, settling cross-border transactions in non-dollar currencies and exploring the establishment of new multilateral settlement mechanisms. After de-dollarization, the role of the renminbi has become more prominent. On August 17, India and the UAE have started settling energy transactions in rupees and dirhams under the so-called local currency settlement mechanism, with the first purchase of oil taking place on the 14th. Indian Oil Corporation paid Abu Dhabi National Oil Company in rupees to buy 1 million barrels of crude oil from the Middle Eastern country, a statement issued by the Indian Embassy in the UAE said. The deal comes after a UAE exporter sold 25 kilograms of gold to an Indian buyer for about 128 million rupees in July this year. The local currency settlement mechanism was part of a historic memorandum of understanding signed on July 15 during Indian Prime Minister Narendra Modi's one-day visit to the UAE. The two sides also agreed then to link their instant payment systems. Local currency settlements are expected to reduce transaction costs by eliminating the need to convert dollars and increasing reliance on the local currency. Traders will be able to choose the currency of payment as per the agreement between the two parties. This oil deal between India and the UAE comes at a time when the global trend of de-dollarization is growing. Today, the world's trust in the US dollar is declining, and more countries are exploring a move away from the dollar, with a rising trend of abandoning it. As Yellen acknowledged, dollar reserves are declining globally. This trend is not an empty one, it stems from distrust of the dollar and concerns about the US financial system. Russia, in particular, has been subjected to sanctions by the West because of the Ukraine crisis. In the face of this pressure, Russia has quickly taken a series of de-dollarization initiatives. In the field of energy trading, Russia has abandoned the dollar in favor of its own currency and other currencies. This initiative has effectively mitigated the impact of the dollar on the Russian economy.